Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his good friend, Mr. Dan Bird. How you doing, sir?
Doing great. How are you?
I'm doing all right. I'm a little nervous. All right, we're going to do something I haven't done in a while. We're talking about doing two trades. I've moved some cash over to an account, and we're going to walk through those trades. Most importantly, we're going to try to help people understand how to make this non-emotional. We did a lot of that in episode 1. We're going to create our entry and our floor to protect ourselves. We're going to right size the account so we're not betting all of our money on one thing. And this is really meant to be a learning experience. We hope to get better each and every week. Anything else you want to say before we bring up your spreadsheet?
I will just say that I'm not at all nervous because it's your money.
I love you. You're awesome. I appreciate that. All right, well, let's bring up the spreadsheet so I understand how much I'm putting at risk in each of these two trades.
All righty. Can you see that?
I can. Thank you.
So this is my risk calculator.
Yep.
I created this. It's pretty complex.
Yep.
Spent a lot of time debugging.
Yeah, I bet.
And I'm still not convinced I've completely debugged it, but
yeah. Hopefully
but,
over the next 6 weeks or so, I understand this well, because we're going to have to walk me through this slowly.
Yeah, it's actually pretty straightforward.
Okay.
Most of the cells in here are protected, so you can't really do anything.
Oh, good.
It's only the ones that have these white bars across them that you can actually make changes to.
Okay.
Everything else is protected.
All right.
All right. And it's set up so you can have 3 separate accounts, so you can actually do analysis on 3 accounts if you want to, if you have different dollar amounts.
Gotcha. Okay.
I noticed you do have a couple of other accounts. And
yeah, we're going to make those go away.
One has a whopping $3.50 in it. So.
Yeah. Thanks.
We'll see that in a second.
Yeah, that's funny.
All right. So at any rate, also this has a bunch of instructions on how to use the thing.
Okay.
All right. So at a high level, this is a risk management spreadsheet.
Yeah, this is something I did not have when I traded, and I should have. This was
the most important thing is right down here. And I actually say this is the most important part.
Awesome.
The number of shares to be traded. This will tell you how many shares you can buy.
Based on my risk tolerance, my stack of cash.
That's right. These 3 rules right here. There's a trade rule. The trade rule is never risk more than 1% of your account on any one trade.
Okay.
The account rule is never risk more than 10% of your total account.
Got it.
And the volatility rule is based on the volatility of the stock, because each stock has a different volatility profile.
Perfect.
All right. Some can move faster than others.
Mm-hmm.
This will manage that as well.
Oh, that's so cool.
The spreadsheet will take the most conservative of these 3 rules and then calculate the number of shares that you can buy.
Perfect. Okay.
All right.
All right.
And then there's an exit rule that helps you understand, where your exit point should be. You should try to figure that out ahead of time. You should try to do a 3-to-1 risk reward ratio.
So if I lose $1 as my floor, I'll get out at a $3 gain, is what you mean?
That's right. Or you buy a stock that has a potential for a $3 gain.
I got you. Okay. All right.
Okay. And then one important component is what's called the ATR, or the average true range. And there's actually a link here.
I will look that up later because I don't know what that is, but we can do that later.
The link's not working.
Yeah, it's probably because we're sharing, but we'll do that later.
Maybe.
Okay.
At any rate, the average true range is the range that the stock moves in a given day.
Okay.
Or a given period. If you're using a weekly chart, then it's the range it moves in a week.
Okay.
If you're using a daily chart, which was primarily what we'll be looking at, it's the what it does from top to bottom, from open to close in any particular day.
Okay.
And that helps you understand the volatility. So if it moves a lot in one day, it's highly volatile.
Okay.
All right. It's also going to help us figure out where to place the stops and things. All right. So let's first start with the first stock. This is Regions Financial. This is the banking stock. So you can type in the symbol up there and just click here, and we'll bring up a chart of Regions Financial.
Gotcha. Okay.
So what you can see right away, and this site here, FinBiz, actually draws in the trend line. So you can see right away that it's already breaking out, or it broke out on Friday.
Okay.
Friday was a down day, but it broke out anyway.
Hmm.
So it's breaking out to new highs right now.
Okay.
That's a good thing.
Yeah.
Down here, it's got lots of other things. It shows you the upgrades and downgrades. Actually, it has an upgrade on January 3rd. That's interesting. Shows you a bunch of the news and things like that, and other components of here about the particular stock. The one thing that we want to find is the ATR, which is right here.
0.7. Okay.
0.7, 70 cents.
Hmm.
So now when we go back to our spreadsheet, we put in 70 cents right here. Okay.
Mhm.
We have in our account roughly $27,000.
Okay.
All right, so we'll put that in there.
Yeah.
This will calculate for all of these figures on the left.
Totally
So
get it.
1%, I recommend 1%. You could go to 2%. I recommend between 10 and 20% on this one.
Okay.
This limits the number of trades you can do. So
Mm,
if you can only have 10% of your portfolio, you can only have 10 trades.
got it.
All right, 20%, then you can only have 5 trades. We're actually going to do 20% because we're not going to do a lot of trades
Right.
in here.
And we could
Gonna
do
do a
trade
few.
rule at 2% if you want.
No, let's leave that at 1%.
Okay. All right.
And then the volatility, I usually always leave at 0.75.
Perfect. Okay.
All right, but you can change these two. The reason I would change this to 2% is if we're in a bull market or just beginning a bull market,
Okay. We're not there.
then I'm okay with taking on more risk.
Got
So
it.
this actually will increase the risk of the trade.
Yeah.
This one here just limits the number of trades you can do.
Perfect. Yeah. We're not going to do many trades. So that makes
Right.
sense. Okay.
Now you could change these numbers individually for each account if you wanted to.
Right.
So if I wanted to have different numbers for each account, I could do that too.
Yeah. That's okay. All right.
All right. So remember, the ones with the white bars are ones that we can put numbers in.
Mm-hmm.
All right. The next thing down here is we want to know what the current price is. And if I go back to that chart, current price is 25.12.
Okay.
All right.
Mhm.
And the breakout point here, you can see right there, is 24.72.
Okay.
Do you see that?
I do.
I'm putting a line right across these highs right here, basically.
Yeah. I see that.
So it's about 24.72.
Okay.
So we're going to place our trade at 24.75,
Okay. I'm with
not at 25.12.
you. Okay.
All right. So we would like for it to come back in, get a better price
Okay.
a little bit.
All right.
It may fall further, but we're gonna use 24.75.
And again, we're doing this on a Sunday. So we do all this work today. It's possible this doesn't execute. If it goes up from where it is.
That's right.
No
That's
problem.
right. The 24.75 is our entry price.
Okay. I'm with you.
So current price, or you could put it higher if you think that it's about ready to take off, and you might want to put a price a little higher just to make sure it's actually taking off.
Yeah.
You could do that too. Right now it's at 25.12. We're going to put our trade at 24.75.
Why not? Okay.
We're going to use a percentage stop of 7%. 7% is what Investors Business Daily and William O'Neill, who
Yeah.
created Investors Business Daily, that's what he recommends.
This is, I mean, that one step, Dan, so helpful. Understanding your stop before the trade is done is just
Exactly.
outstanding.
That's critical.
Yeah. I wish I have an MBA. We never talked about stuff like this. It's crazy.
Yeah, this should be taught in schools. Actually.
I totally agree. Okay.
In
So
high
our
school.
stop is 2302. I like it.
Our stop is 2302.
Mhm.
I usually like to put a stop a little below an even number.
So you would do 23, for example?
I'd probably do 22.95.
Oh, okay. All right. That's
All
fine.
right.
So that's a guide
Now-
then.
Yeah, it's a guide.
Okay.
It depends on what it is. If this said 23.44, then I'd probably use 23.44.
Okay.
But anytime it's near a round number,
Yeah, it's like a magnet. Yeah.
everyone puts their stops at the round numbers.
Yeah, it pulls it right towards it. Yeah.
Right. So I like
Okay.
to put it a little bit below. Of
Got
course, a lot of people put it a little below as well. But
Yeah.
now this little number right here,
Yeah.
you can see it says 2 times the ATR
Uh-huh.
for a manual stop.
Oh, I remember
So-
that. Yeah.
So remember, the
0.7.
ATR is the amount that this moves in one day.
All right.
All right. So
Okay.
it moves about 70 cents
Mhm.
is its average range per day.
Okay.
So if I want to put a stop that's twice the average range,
Mhm.
$1.40,
Hmm.
right? I
Mhm.
want to put $1.40 below this price. Well, this calculates it for me.
I get it. Okay.
So now this is 2 times the average true range.
Got it.
If I want to use that 23.35,
Okay.
now it tells me what my percentage would be,
Got it.
566.
Got it.
Now, in this particular case, it's interesting because normally the percentage for the average true range is actually higher than 7%.
Okay.
In this case, it's actually more conservative.
Got it.
But notice what it does down here. Remember the most important part, the number of shares I can trade?
Yeah.
If I choose to use the 7%, I can buy 150 shares.
Right.
If I choose to use the average true range, which is 5.66%, I can now buy 190 shares.
Yeah, because your stop is tighter, as they say.
The stop is tighter, which is more likely it's going to get stopped out. I can buy more shares, but my risk is the same.
Okay.
All right.
I'm with you. Yep.
All right. So which of those do you prefer?
I believe in the economic picture of the 10-year note, like again, doing top down. So I want to do the more shares version. So a tighter.
More shares, which means you could get stopped out quicker.
Yes, I'm going to take that risk.
Okay. So you want the more shares. All right.
I
So this one's done. Down here, it tells you if you want to scale in, and we are going to scale in
Okay.
on these trades.
All right.
This is optional, but if you want to scale in, you can actually change the percentage over here. Let's say I want to buy half.
Yeah, let's do 50
shares.
50. Yeah.
I want to buy half of those shares up front.
Yep.
And then it tells you how many shares you can buy at each of the next levels. 2% up, 1% up. Yeah, here's the price. We're going to set those prices.
Perfect.
All right. So you want a 50% scale in. So
correct.
the first buy will be 95 shares.
Correct. Yes, please.
Okay. All right. So now let's go over here and do the other one, which is QID.
Okay.
QID is a 2X reverse ETF on the NASDAQ.
Yeah, basically saying I'm thinking the NASDAQ has more pain to come.
That's right. You think the NASDAQ's going down.
Yes.
And by the way, when rates go up, it's bad for growth stocks.
Of course, especially stocks that don't make money.
Right.
Yes.
Now, the first thing you'll notice with this is, again, this is drawn in the trend line. Well, 2 things you'll notice. First of all, you'll notice that it's continually going down. These reverse ETFs are very dangerous.
Yes.
So you should be very judicious on when you use them.
Yeah. I would tell any new investor who's not done this for a while or doesn't have money that they can lose, never do these. That's what I would tell them.
Yeah. Well, I would agree with that. I would say only do them when you're pretty darn sure the market is going the direction you think.
Yeah. And again, I'll say, don't do them. This is not financial advice.
I would agree. I would agree with that.
Yeah.
Don't do them.
Yeah, don't do them. But I'm going to do one because this is fun money to me.
And we are fairly convinced the market's going down Wednesday.
Yep. Okay.
I just went through that in the previous.
Correct.
Video.
Go watch video 1.
Right.
Wednesday's going to be interesting. Learn the word base effect.
Right. So right now you can see this trend line right here. We're right at the top of that trend line.
Yeah, we are.
We're getting ready to break out.
Okay.
All right. The ATR is 0.62.
Yep.
All right. So we go back here and we put 0.62 for our ATR.
Okay.
We have 27,000. It's the same account.
Yep.
But now we can do 2 stocks side by side.
Yeah.
The price, I didn't look at the price. The price on this one. The price on this one is 1707.
Okay.
All right. Now you see this other trend line right here. It's going up. That one is this is a good example of using technical analysis.
1755.
1755.
Okay. I'm with you.
So in this case, we're going to put a buy above the price.
Ah, okay. I got you.
Now we want to make sure it's actually going up.
That made sense. Okay.
All right. So in this case, we're going to put a price at 1750.
Okay. All right. I got you.
All right. And we'll use a 7% stop.
Yep.
And then we'll go over and actually show you how to execute these trades. And using the 2X ATR, again.
Mhm.
For a manual stop, this now it says 1626.
Okay.
Just out of curiosity. I don't always use this, but out of curiosity, I just like to see what the percentage is. Look at that. It's almost exactly
Almost
the
the
same.
same, yeah.
Right. And you can see down here, it only changed our number of shares slightly.
Okay.
So
Yep.
which one do you like in this one?
I like the
risk
more.
is pretty,
Yeah.
risk is pretty much the same.
We'll do the same one. We'll do the whatever it was with the 190, whatever that was, the ATR. So we'll do the 210.
210. All right. All right. So there's our two trades, right?
Yep. And we're going to scale in 50%.
50%. Yeah, we've already got that. This 50%, you can't do it per account. So
Yeah,
you
it's
have
just straight across the board.
right. So
Okay.
in this case, it's for both of them.
All right.
All right. So now you're ready to place these trades?
Yeah, let's do it. And yeah, and also show people putting in the floors.
Yep. All right. So this is Schwab.
Okay.
This is called Street Smart Edge. This is Schwab's trading platform. I set this up for you. One thing I did was I put in across the top, these are the indexes, the Dow, the NASDAQ, the S&P, the Russell. Oops. I couldn't see it because of the.
Oh, sorry. Did I move it? I can move our picture.
No, you didn't do anything.
Oh.
It's just on my side. The Zoom tab is covering it up.
Got it. Okay.
Okay. All right. So I got the Russell. You got the 10-year Treasury.
Yep.
See that one up Friday?
Yep.
You've got bonds. Bonds went down. You would expect these two to go inversely to each other.
Correct.
Here's the VIX. Here's what I was talking about. The VIX went down even though the market went down. See, the market went down here, and the VIX went down too.
It's interesting. Okay.
This is gold,
Sure.
and this is Bitcoin.
Yep.
So now you can see during the day what all that stuff is doing.
Okay.
All right. So we happen to have QED already loaded in here.
Perfect.
So we'll start with that one.
Sure.
So this window shows you on the right-hand side, it shows you a daily chart. You can also look at a weekly chart. Notice again, these 2X ETFs always go down until they don't. Now the market's been going up, right, lately. So naturally it's going to be going down.
Of course.
This only goes up when the market goes down. So
yeah, it's a reverse. Yeah.
We're hoping that it's going to reverse. All right, but there's a daily chart. I like to keep the weeklies. I do have a weekly, daily, 30-minute also set up here. So there's the weekly on the left, there's the daily, and then the 30-minute right here. You can see the 30 minutes is coming up about ready to break out.
Yeah, actually, all of this, I mean, some people looking at this are going cross-eyed probably by now. I'm curious, how long, because you've been doing this for 20, 30 years.
Right.
How much time in the weeds of technical analysis before you felt like you had a high school education, then college, and now, you have a PhD? Give us a feel, because people need to realize you got to do the work.
I would say probably 3 years.
Yeah. Okay, good.
3 years and doing it a lot. I mean, I didn't do it as much as I would have liked because I had a regular job.
Yeah, those damn day jobs got in the way.
Right.
Yeah.
I can do it a lot more now.
Yeah.
And so back to our trading view.
Yeah.
We've got a 1-minute chart here, so you can see the 1-minute chart. This is coming up.
Yeah.
So this might be good if it breaks that 1750.
Yeah.
Right. Down here is market edge. This will give you something what market edge thinks about this particular stock.
That's funny.
It's interesting stuff. It's got a neutral rating on it right now.
Yeah.
And then behind this screen right here, this is actually some information about the stock.
Yeah, what
itself,
it is. Sure.
where they're located, what it is, what they do, what their business is, some of the fundamentals on the stock.
Yeah.
All right. So up here is our trading window. So we are going to buy 210 shares.
Or we're going to buy 105, right?
No, we're on QID right now.
I thought we were buying.
Oh, I'm sorry. Yeah, we're going to buy 105. That's
right.
Yeah, we're scaling in.
Yeah.
We're scaling in. So we're going to buy 105 shares.
Okay.
With a stop price.
Oh, look at that.
Right. So we're buying a stop. So the way to think about this, and actually on my risk calculator, I have order definitions right here. And this helps you understand what they all mean. No, the simplest and easiest one is sell stop. Everybody kind of knows what that is.
Right.
That's where you put a stop below the price in case it goes down. We're going to do that too.
Mhm.
But a buy stop is the opposite. Buy stop is if it goes up here, then buy it.
Hmm.
And then the limit order buy limit is below and a sell limit is above,
Got it.
etc. And this is something for options down here.
Yeah. Don't do options if you're new.
Don't do options unless you're a seller. Don't be a buyer. Don't be a buyer of options, be a seller of options.
There you go.
And that's a whole nother
Yeah.
video we can do.
Yeah. We're not going to take the newbies through that just yet. Maybe in a year.
Right. Okay. So 1750 is where our stop is. We want to buy it when it gets up to 1750.
Okay.
And our stop, we're working on this one, right?
Mhm.
So our stop will be 1626.
Okay.
So buy it with a stop at 1750.
Okay.
1750, and then we're going to put a bracket on it. So stop loss exit will be at a price of 1626.
Mhm. Okay. Agreed or accept. Okay.
Place order.
Cool. All right.
All right, so now you can see right here, our order is placed. This is the daily chart. Our order is placed right here. And what you'll notice is you see these highs,
Mm-hmm.
it's right there at those highs.
Nice.
So if it gets up there and goes beyond it, then it's breaking out of the high.
Mm.
That's the break point,
Right. Hence the, yeah.
as in break point trading.
There you go.
All right, so there's the break
And
point.
now, is that good for the week, a day? What is that?
Actually, that's a good question. I think it might have been a day. Let me go back and look. Yeah, it's for the day. Let's make it. Well, what do you want to do? You want to make it just for Monday or?
I don't know. I don't know.
do you want
So
I mean,
the other one is,
Wednesday is the.
yeah. So let's just make it good until execute or whatever.
We
that
can
is.
cancel it ourselves.
Yeah, exactly.
All right. So now, good till cancel means it will just stay there
Yep. Until I come in and cancel it, or it
until you
executes.
cancel it, or there's most platforms have a limit like 60 days or something.
Yeah, or it'll execute, one or the other. Yeah.
Or
Okay.
it will execute. Right. All
Okay.
right.
All right.
So there's our QID. So that's now placed.
Yep.
All right. What we can then do.
Do we place the other
Remember-
50% now?
Yeah. So the other two is 2% is at 1785, 53 shares. Right. So if it goes up, if our thesis is correct,
Mhm.
and it continues higher,
Mhm.
then
Buy,
at 2%, at another 2%, which is 1785,
We buy
we
again.
can change these numbers.
Yeah.
1785 will buy another 53 shares.
So you really want to ladder in 3 times.
That's right.
Okay.
You can do 2 if you want.
Yeah, let's do 2. Just,
You want to do 2?
yeah,
Okay.
let's just do 2.
Then what we'll do,
We'll split the
is
difference.
We'll go back here and we'll just make this one 0.
Okay. Yeah, so 1785 is still the number. 52 plus 53 is 105. Gotcha.
Right. It's 105.
Okay.
So 1785 at 105.
Yep.
Okay, so now again, we're going to buy 105 with a stop at 1785 this time.
Okay.
All right, and make
Put
it good
in-
till cancel.
Yeah, good to cancel. Stop
And
loss.
stop loss.
Do we move that
now-
up
Well, we will move it up, but we're going to leave it there for now
until it executes? Okay, that's fine.
till it executes. Right.
Okay.
But there's a whole, once these execute, then we'll talk about moving
Yeah,
the
that's fine.
stops.
No problem. And again, folks, this is not financial advice. This is just me learning how to trade with no emotions.
All right, so now we have 2 orders in here. We've got one at 1750 and one at 1785 for
Yep.
our full trade of 210 shares.
And again, if we go back to your chart or your spreadsheet, it'll tell me my maximum loss. Right? Maximum loss from this trade is $270. Am I reading that right?
No, the maximum loss will be 8% down here.
Of the trade. So $400.
Right. 8% of the total trade.
Got it. Because there's two. Okay, two. Got it. Okay.
Right.
Okay.
All right. So now let's do the other one. Let's do
RF.
RF.
Same deal.
You're gonna
We'll do two trades, 50%. Same deal.
Right. Yep. So in this case, our price is $24.75. So RF.
Okay.
There's the chart. You can see it's breaking out.
Mhm.
There's the high right there.
Yep.
Broke out Friday. Now we want to buy this one, but now we want to buy it. And what were the number of shares?
I forgot. 95, I think. I don't remember.
This one was 190. So 95 is our scale in.
Yep.
95 shares at $24.75.
Okay.
95 at
Nope, that says
24.
05. At least on my side it does.
Yeah, you're right. 95 at $24.75. Good till canceled.
Mhm.
And now our stop price is 23.35 because we're using this side.
We
over
are.
here,
Yep. We're using that one. Yep.
right. So that one's a little higher. So the stop price now is 23.35. Good till canceled.
Mhm.
All right. Review order. Oops.
Okay.
Oh, yeah, it's less than the last trade. That's what I want.
Yeah. Yeah. That's what we want. We don't want to buy it. Yeah. I got you. Okay. We're basically hoping it comes in a little bit.
Oh, you know what? That's not right. Yeah,
Okay.
I'm glad it gave me that. I'm glad it gave me that warning because it's not a stop. If you put it below, it's a limit.
Got it.
That would have executed immediately.
Huh.
24.75. That's something you have to really be careful of.
Yeah. If you're going below, it's not a stop. Okay. Got it.
Right.
All right.
For buying, a stop is above it.
Got it.
A limit is below.
Got it. Yeah.
For
today.
selling, a stop is below and a limit is above.
See all these little things that can get you.
Right. So the stop loss is still the same. So now we have a limit order.
Yeah. Which basically means you don't want to pay anything more than 24.75.
That's right. What it really means is when so buy limit,
Mhm.
change it to a market order if the price drops to this level or
Mhm.
lower and
Right.
executes at the then current market price.
Mhm.
So yes, it will execute if it goes down, but
Mhm.
it does not guarantee you that price.
Correct. Absolutely. Yeah.
If for some reason something happened with Regions Financial over the weekend
Mhm.
and it gapped down to $20,
Mhm.
then your trade would execute and you buy it at $20.
Correct.
Which might be a good thing.
Maybe. Could be.
But
Okay.
if it keeps going down, if it keeps going down to 10, then it would be a bad.
Yeah. Well, then my limit would kick in and yeah, that'd be okay.
Your stop.
Your
Yeah, your
stop,
stop would kick in right away, actually.
Yeah. I'd be,
You
Okay.
buy and sell at 20. All right. So now let's do the upside of this.
Okay.
So 25.25
okay.
for another 95 shares. We want to buy 95 shares. This time it is a limit. No, this time it is a stop. 25.25. So buy stop. Buy stop is when it goes up.
Okay.
We're going to leave the stop loss at the same place.
Okay. All right. Okay.
Okay. So now you have two orders placed.
Yep.
So now you have your scale in with your stop loss already in place.
So let me ask you a question. I think I know the answer, but I'm going to ask it for the audience. Let's assume that the stock opens up Monday from Friday's close. In the first trade never executes.
Mhm.
It is possible that the second trade does execute if it runs on Monday.
That is correct.
Okay.
If that happens,
Mhm.
then that means our thesis is correct.
Correct. But
And-
my
and
first
we-
trade
and we-
never happens.
The first trade never happened. You just cancel it or you change it into a stop
Right.
And it becomes your new scale in trade.
Right. It becomes the second trade. Yeah.
It
Agreed.
becomes a second trade and you move your stop up.
Yep. I mean,
And you can use the spreadsheet to figure that out.
perfect. Okay. All right. So again, why don't you close this window and then we'll just, you and I talk as we wrap this
Yeah,
episode up. Oh, go ahead.
a couple of points, really important points. Number one, we use the charts to, as you can see, we use the charts to figure out where we should enter.
Mhm.
As I mentioned on a previous video, the most important part of trading is when you buy, not when you sell,
Yeah.
right? So in this case, we're going to wait for it to come down some before we're buying. On QID, we're going to wait for it to go up some before buying. If
Yeah.
both of those trades execute, they're going to appear in our window over here,
Okay.
and it will show us, how much we're winning or making or losing.
Sure.
The second thing that's really, really, really important is you cannot use the spreadsheet unless you know where your stop is.
Yeah, this is the big deal for me. This spreadsheet is everything to me. This is the thing that I never had, never thought about. I want people to realize if you are going to do stocks, you have to think about limits. You have to control. You have to not too many people overweight their portfolio to, hey, 50% of it is in Tesla. That's not a smart idea long term,
Right.
at least if you want to do risk management. So,
right.
I mean, there's so much in this spreadsheet.
Risk management is the most important thing.
Yeah.
It's not picking the stock. It's not picking the entry. It's not, doing something that your neighbor told you is a good thing to do.
Yeah, exactly.
It's none of those. Risk management is the most important thing.
Yeah. Again, you talked about in one of our first videos, there's three, I don't know what you call it, levels or maturity of an investor. You want to talk about those one more time?
Yeah, I start off with you lose all your money.
Yep.
And that depends on the market. Can take anywhere from, 3 months to 3 years.
Mhm.
Second phase is you stop losing money.
Mhm.
That's the point where if you've been studying technical analysis for all of those 3 years when you were losing money, that's the point where it helps you to stop losing money.
Yep.
And then phase 3 is where you start making money.
Yeah. And again, how long you've been doing this, Dan? 30 years ish?
20 years.
20 years. So yeah, this is, we've only been doing this together 3 or 4 weeks. Nobody is supposed to learn this from scratch. I'm still learning. I want to stress that this is Michael Zuber learning something he doesn't know. So I'm asking lots of questions.
Yeah. So we'll see what happens. I mean,
we'll talk next weekend.
if something happens tonight, if we go to war with Russia,
yeah,
right,
well,
then we can go back in and close all these out.
Yeah, no problem.
If by the way, if on QID and all the stocks that you look at are down below as well.
Oh, okay.
So I can just click on that on QID. If QID, remember, we have that first buy, we're expecting it to go up. Let's say, inflation is way lower than anyone expects.
Yeah, which could
And
happen.
it goes the other way, right?
Yeah.
Then this starts to go down.
Right.
What happens to our trade?
Doesn't happen. Doesn't execute.
Nothing. It doesn't happen. We
Yeah,
haven't lost a dime.
Nope.
Unless it goes up.
Yeah.
Now the RF trade will execute. And then we have to make, but we'll have the stop in there already.
Correct.
That's the 5.6%. So all we're going to lose is 5.6%
Of the trade. Yes.
of half of the trade.
Yeah. Of half the trade. Correct. Of half
the trade.
Yeah.
Right. So our risk management is protecting our portfolio. We can live to trade another day.
Yeah, this is all new to me. This is all stuff I don't understand. I'm going to be, I'm still in preschool at this point. I understand some of the vocabulary, but this is all new to me. And so thank you for doing this for me.
Sure.
Thank you for setting this up. We will talk again, I think next Saturday.
Yep. Next Saturday should work. By the way, notice Market Edge has an avoid on Regions Financial.
Yeah, I don't really like these, at least for me.
Yeah, they're always late.
They're late. Exactly. Yeah. And they miss transitions badly.
Yes, that's right.
Yeah. All right, buddy. Thank you very much for this. This is great. We'll see what happens next week.
You want me to put my newsletter back up?
Please. Because a lot of people are going to be like, how do I get a piece of this guy's weekly newsletter? It is breakpointtrading@gmail.com. It's free. It's just, he does this for himself and he shares it with hundreds and soon to be thousands of other people. So Dan, thank you very much.
You bet. My pleasure.